So we have the end of the financial year coming upon us. What should we be thinking about as companies?
Yes, there's a number of people that still haven't actually filed their 2014 returns, which is actually quite interesting. And clients that are with accountants and other institutions that file tax returns and are registered with the IRD as such have until the 31st of March the year following. However, the problem with that, of course, is that they don't know what their tax commitments are. A lot of those tax commitments have already passed, so they may have underpaid or overpaid, so they really do need to get those returns finalised. They also, if they don't have them done, so I'm talking about the 31st of March 2014 year, they're required to be done if you're with an advisor by the 31st of March 2015. If they haven't got those done, they need to get them done. If they don't get them done by the 31st of March, they lose their extension of time, which then causes all sorts of issues for them in their business going forwards, including it pulls the payment dates back, so the dates that they could be subject to interest and penalties. Moving on though, thinking about the 31st of March 2015 and what businesses need to be doing. They certainly need to be thinking about writing off any bad debts that they may have, because they need to be actually physically written out of a debtors ledger before the 31st of March. Otherwise they actually have to pay tax on those if they're still in the ledger. So you don't want to be paying tax on debts that you're not going to recover. So the debtors ledger needs to be cleaned up. They need to know, obviously, at the 31st of March the people that they owe and make sure that they make an inclusive list of those. Obviously they need to be doing things like doing stock tax, so making sure that they've done that on the 31st of March so it's accurate, because again your tax position can be over or under assessed accordingly. And they also need to be considering whether they've got any assets that should be scrapped, and go through their asset schedules that are included within their financial statements, take a good look at those. They need to be preparing their end of year GST return, the 31st of March GST return, and making sure that any adjustments that their accountants have told them about previously have been included and returned to the Inland Revenue. They should be asking their accountants for lists or questionnaires, is normally what happens, so that they can go through those and make sure that they've gathered those things, because obviously as time goes by we forget. It's a natural thing. So the collection of those on or around the 31st or very shortly after is a prudent thing to do as a business person. As far as what things should we spend money on to save tax, that's always a question that we get asked. You get the people ringing in, should I buy a new vehicle? Should I spend a whole lot of money on this? And it depends. And it depends on that client's personal situation. Normally it's not really a smart idea to go and trade in a vehicle or what have you close to the 31st of March. That's underlying normally, because we may have a depreciation recovery on the old vehicle or asset, and then we may only have 1 month's depreciation that we can claim on the new one, so it doesn't kind of work out as people think, because we can't claim the full cost of purchasing that asset like people may think. However, for some others, some spending on some consumables may assist. But my main advice is, if you weren't going to spend the money, then don't go and spend it to save tax. At best, you're only going to save yourself 33 cents in every dollar. So it's better to hang on to the money and to pay the tax on it. You're going to have 67 cents left, aren't you, at the end of the day? My best piece of advice would be to take some advice, to actually give your accountant a ring before the 31st of March and to discuss those issues at length before you go and make those types of decisions, because often those decisions can end up costing you money instead of saving you.